It's pretty wild when you think about it. Most of us spend our entire lives working for money, chasing it, worrying about it, but we never really learn how the whole system actually works. And I don't mean the stuff you read in a textbook. I'm talking about the real system, the invisible rules that shape pretty much everything in our financial lives. So, let's pull back that curtain, shall we?
I want you to think about it like this. What if your whole financial life is a game, but you were never handed the rule book? Because honestly, that's what's happening. The world of finance is a game, and for most of us, the rules have been kept just out of sight. Today, we're going to lay out exactly how this game is played.
Okay, so the very first thing you've got to understand is that our financial system isn't some kind of natural force like gravity or the weather. Nope, it's a man-made structure. It was designed, and understanding that design, who it's for, and how it works is the most important first step you can possibly take.
And that leads to the big question, why is it all so complicated? Well, here's the tough truth. The system is kind of designed to be confusing, to feel like something only a genius could understand. Why? Because when the public doesn't know the rules, it directly benefits the people who wrote them. You can't really question a game you don't even know you're playing.
So, let's start with the most basic piece on the board, money itself. We've got to tear down what we think money is, because I promise you, it's not what most of us have been led to believe.
When you really boil it down, modern money is just trust. That's it. We use something called fiat currency. Think of the US dollar or the euro. It has zero intrinsic value. It's not backed by gold or silver or anything physical. The only reason it works is because we all collectively agree that it works. It's a shared idea. The second that trust disappears, well, so does the value of the money.
And this is a really crucial distinction to make. That paycheck you get, that's not actually wealth. It's a claim on wealth. It's a token, a promise, that you can exchange for real things of value, like food, a house, a car. But the paper itself, or the numbers on the screen, that's just the claim, not the actual prize.
Okay, so that leads to a pretty big question. If money is just a promise, where do all the new promises come from? This right here is the absolute core of the system. This is how money is actually created. And the answer? It's probably going to shock you.
It's all built on a system called fractional reserve banking. Now, the definition sounds kind of boring and technical. Banks only have to keep a small fraction of your deposit, and they can lend out the rest. But the real magic, the part nobody talks about, is in how they lend it.
All right, let's walk through this together. Say you deposit $1,000 into your bank account. Your account says you have $1,000, right? Now, the bank is only required to keep a small piece of that, let's say $100. It then lends out the other $900 to someone else, say for a car loan. Now, that person has $900 in their account. But wait, your account still says you have $1,000. Suddenly, there's your original $1,000 plus $900 new dollars. Just like that, new money was created out of thin air as debt. Let that sink in for a second. The bank literally just created new money digitally with a few keystrokes, simply by issuing a loan. The vast majority of all the money in our entire economy only exists because someone somewhere owes a debt to a bank.
And this is where the engine really starts to spin out of control. Think about it. The bank creates the $1 million for the loan, the principal, but it does not create the extra $50,000 needed to pay the interest. So, where on earth is that extra money supposed to come from?
The only possible answer is more loans. More debt has to be created in the system just to pay the interest on all the old debt. This creates this giant, spiraling cycle that demands constant, never-ending growth. The system literally has to get bigger and bigger forever just to keep from collapsing. And you have to understand, this isn't a flaw. It's not a mistake. It is the system. This is a feature, not a bug.
So now we get the mechanics, right? But knowing the rules of the machine is only half the story. The system also has these incredibly powerful psychological controls built right in to make sure that most of us keep playing the game exactly the way they want us to.
The sheer scale of this debt engine is, well, it's just astronomical. I mean, look at this number, $37 trillion. That's the kind of debt we're talking about at a national level. It's a number so huge it barely means anything. And it's all built on a culture that has completely normalized debt, from our credit cards all the way up to our governments. And here's the sales pitch, isn't it? Debt lets you have the life you want, right now. We're bombarded with messages telling us to buy things, to show off our success. Debt makes that happen instantly. The catch? You pay for it by being trapped, predictable, and frankly, controllable for years or even decades. And this right here, is the ultimate psychological trick. The system is designed to be confusing. So when people are drowning in debt, struggling to get by, they don't get angry at the system that's designed to produce that exact outcome. No, they blame themselves. They just think, I'm just bad with money.
But not everybody plays the game this way. The people who actually understand these rules, they use the exact same system, the very same tools, but with a completely different strategy.
It really all comes down to two mindsets. Most people borrow money to consume. They buy liabilities, things that take money out of their pocket, like fancy cars and vacations. Their debt goes up, but their actual wealth doesn't. The wealthy, on the other hand, borrow to invest. They buy assets, things that put money into their pocket, like businesses or real estate. Yeah, their debt goes up, but their assets go up even faster. And the best part? The interest they pay is often a tax write-off. It's the same tool, debt, used for completely opposite results.
So where does that leave you? What do you do with all this? Well, just understanding the game you're in. That is the most powerful first step you can possibly take. It allows you to finally start making conscious choices instead of just being moved around the board.
And I really want you to hear this part because it's the most important takeaway of all. This knowledge doesn't mean you can just magically opt out of the system tomorrow. You can't. But it frees you from the psychological trap of blaming yourself. It lets you shift your focus from what's wrong with me to, okay, how does this system actually work? And believe me, that change in perspective is everything.
Once you see the game for what it is, you can choose to play it differently. You might not be able to escape it entirely, but you can absolutely refuse to play it the way it wants you to. You can decide to stop buying things you can't afford just to impress people. You can start building a real life where money is your tool, where it serves you instead of the other way around.
So there it is, the invisible architecture of money, debt, and the game we all find ourselves in. The rules aren't hidden from you anymore. The only question left is, what's your next move? That, my friends, is entirely up to you.